Gerard, why is Citi still struggling 5 years after the crisis?
I think what you have is a very large, complex organization that it's difficult to manage as easily as a regional bank, and I think that's part of the challenge that this company has.
Yeah, we learned last week both JPMorgan and Wells Fargo had lower revenues, and we're expecting today from Citi revenues to be down 7%, earnings to be down 12%. Is there any reason to buy Citi at this point, Gerard?
Yes, we think it's a very attractive value play. When you think about where the stock is trading relative to their tangible book value, the stock is very inexpensive. Granted, over the very near term, meaning today and the next 30 days or so, the company could struggle. Longer term, though, when you can buy a bank without any serious problems below tangible book value, investors do well.
Gerard, you're not as gorgeous as Meredith Whitney. Do you agree with Ms. Whitney that there'll be a lot more cost reductions, layoffs, and firings at the big banks?
Tom, absolutely. These banks need to continue to downsize. Yeah. We saw on Friday's announcement with JPMorgan, their mortgage business is still losing money from a production standpoint, and it's going to be in investment banking and mortgage banking as the two areas.
Gerard, give me a number there. What are we talking, 10,000 or worse?
I would say for the industry, it's going to easily be in the tens of thousands.
Gerard, are you worried about being the same old Citigroup after Citigroup failed the Fed's stress test and really can't return the capital that it wants, really wants to boost that 10% by 2015?
No, absolutely not. This is not the same old Citigroup. I think this is a shot, though, from Washington telling the biggest banks that they still are very unhappy that they haven't broken up. So I think we're going to see opportunities to make money here, but this is not the same old Citibank in our view.
Hey, Gerard, what is or should be on the top of the to-do list for CEO Michael Corbat?
I think the number one thing that he has to do is to be part of the resubmission process to receive the approval from the regulators. They will do that this year. It's being headed up by Jim McQuaid, who is a very accomplished CEO for the company. And then second is to bring down the Citi holdings. As you guys know, that's the distressed assets. And then we think that's the second thing.
I got to be miserable today. The Red Sox were terrible this weekend. Gerard Cassidy, are you load the boat on the banks? Are you adding shares?
Absolutely, Tom. I think this is a great opportunity.
Okay.
And
I want to cut you off because of time. Christopher Grisanti with us. You don't agree with Gerard Cassidy, do you?
I don't agree, but we have different styles. We bought the banks because in the wake of the 2009 crisis, we had banks that, that's what Gerard was saying, half of tangible book. Now they're getting back to what we consider fair value.
Okay, back to you, Gerard Cassidy. Then how do you push against a caution? To those cautious on the financials, how do you respond to them?
Tom, there's one last leg up for the banks, which is the steepening yield curve and rising short-term interest rates. Probably we'll see both over the next 12 to 18 months. When that happens, these bank stocks will go to even higher highs in our view.
Gerard, very quickly, upside here on these banks, 10%, 15%?
I would say that by the time the Fed starts raising short-term interest rates, the stocks can move from today to that point, we think 20 to 30%.
Wow.
Gerard Cassidy, very widely followed analyst over at RBC.
Did he say 20 or 30%?
He did.
Yeah,
20 to 30%.
Grisanti's getting up and walking off the set. He's so upset about that.
I mean, Citi trading at a discount, a marginal discount to book, tangible book.
Right. I don't think there's a much greater than market return in the banks looking forward. We've made over 100% on these banks over the last 3 years. Let's not get greedy.